You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That the rockinest of tunes means it's time for the rockinest of option shows. Yes, it's time for the option block. My name is Mark Longo. You can tell I'm in a good mood. I like doing the option block. It always brings a nice smile to my face. Every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. So if you're hardcore, you like our little special bonus feature for your hardcores out there, you want to listen to the live stream, we got it out there for you. Head on over to Mixlr.com or just follow us on all the old social medias and the options on Twitter, Stock Tits, or Options Insider on Facebook. And you'll get the link. Grab it once, set it and forget it, as they say, and then you're good to go. You'll be notified instantly, particularly if you follow us on Mixlr. You'll know the second we go live, and you too can join the live party. That is the Option Block. We don't just do Option Block live. We do TWIFO live. We do VolViews live. Sometimes we mix in some other fun stuff throughout the week, and there's some interviews and other things live. So grab that link, save it, bookmark it, follow us on Mixlr, all that fun stuff, and then you too can join in the live party. That is all, not just the Option Block, but all of our programming. And of course, you can always get all that stuff on demand wherever you find your favorite podcasts. Just search for our network. You can get Option Block obviously by itself, but if you want the full kit and caboodle, head on over to the network and make sure wherever, if you're listening after the fact, make sure you leave us. Forget about the Rock Lobster. Just leave us a nice review. Don't leave our. If you want to slam him, hit him up, Andrew at OptionPit.com, and he too will gladly accept all of your slammings. As long as you buy a webinar or two, he's happy. All right. And however you listen after the fact, whatever the case may be, hit us up, questions, comments, insights. Man, make sure you head on over to our especially our Twitter, because we like to put questions there for you guys to play around with. You guys are having a lot of fun with this week's one already. So if you're not playing over there with our weekly questions of the week and our flash polls during the shows and everything else, head on over, follow us. It's pretty fun stuff. You too can weigh in on the issues of the day, pressing, fun, and sometimes just silly, like we have going on this week. Speaking of just silly, I'm joined by a silly cast of characters. Starting off with, you may not be familiar with this voice because you haven't heard it in some time, because his cohort, the greasiest of meatballs, has just been hogging all the spotlight. But now he's fought his way through. He's back. He's ready to rock. He is none other than the Rock Lobster himself, Mr. Andrew Giovinazzi from the OP, as the cool kids call it, the OptionPit.com. Mr. G, welcome back from the OP, sir.
I was attempting vacation time. So that's what that was my big that's why I was gone, and Sebastian hogged all the airtime.
Vacation. What is that? I know not what you speak of, sir. This madness you call vacation. All right, and also joining us not from his actual office. I think he may be in St. Charles. I don't know. He's actually joining us from his mobile office, a.k.a. the Uncle Mike Mobile. Hopefully he doesn't crash. I think he's marked by good old Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome to the show. And where are you parked? Are you still in the beautiful region, the environs of St. Charles, I say, as I hit the microphone? Or are you elsewhere, sir?
I can't tell. I'm on a secret mission, so I can't divulge that information. But I will say this: I am down with OP. Yeah, you know me.
There we go. All right, with some 90s era rap references well into the books, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block. This is indeed the portion of the show where we break down what was moving, shaking, rocking, and rolling. By the way, if you guys are listening live, you guys can always hit us up with what was on your own personal tape today as well. Maybe some weird names you guys are trading. You guys are clearly slinging a lot of lottery tickets, so maybe we'll get to that in a little bit, as well as your many thoughts on the options-oriented nature of the big fight this weekend and all sorts of other crazy stuff. But first, let's bring it down a notch to the old markets, where the markets were kind of bringing it down a notch a little bit today as well. It's kind of been, after we had such a tumultuous couple of weeks out there, kind of a quiet end to the sessions today, kind of following the heels of a few quiet sessions out here. The S&P literally unched after having a little bit of a range, having about a 10 handle range on the day today, settling out pretty much unched on the day. The Qs and the Dow also pretty much following suit. Qs up a little bit, Dow off a little bit. So S&P is Goldilocks today, right there in the middle. And VIX cash getting a little bit of the weekend back, up about not even 0.2 of a point, right around, hovering right a little bit shy of the 11.5 level right now. Mr. Rock Lobster, I think we'll start with you because it's been a while since you've been on. You've missed all the fire and fury and you take a couple weeks off and you missed all the good stuff in the market. Now you're back and quietude, the kind of phrase, reigns again. But that said, what's catching your eye in today's activity? And if you also want to hold court a little bit on some of the crazy VIX action we saw over the last few weeks, feel free, sir.
I think, this is the market fatigue. I swear to gosh, we have like a catastrophic hurricane and all the vol futures were lower from last week. I guess all the vol futures got bid up toward the end of last week because of it, and then they faded this week because, obviously it's bad. It's bad for the people that live there, but it doesn't. I don't know if the damage will be as bad as they were anticipating.
I don't know if you know that, but it only matters if you're trading like WTI. Other than that, no one seems to care.
I guess someone even WTI, like oil's down, but gasoline is up. All the normal stuff from your average, huge hurricane. I think mostly VIX is dominated by the tweeter-in-chief, so there wasn't, except for a pardon, which is pretty low on the just traditional radar on tweets from him. And now that the Congress is doing battle with itself, I think we'll start to see, if we get anything out of this, we'll start to see a little pickup in VIX. But it was all a lot of just strange news conferences and stuff like last week that caused that big run up and that very, very short, I guess, run up in vol. Everybody's worried about that a lot of the key economic advisors were going to leave, and people are going to desert the ship. And for right now, a lot of those kind of those smaller business councils left, but the major players haven't yet. So it's a very odd brew of it is a strange tempest that is brewing, and it ain't just in Houston anymore.
Look at you coming back, throwing a little Shakespeare down on the old show. Strange tempest. I like it. A little bit of alliteration here for our audience. Let's see if he can do the same from his mobile HQ there, somewhere in an undisclosed location in or around St. Charles. Uncle Michael caught your eye in this relatively easy for me to say today, relatively tranquil day on the old markets.
The Tempest Tranquil Day. You guys are talking all this fancy stuff for me. I don't know. The thing that really caught my eye was I would have figured, thankfully, I'm not a crude oil trader by any means, but just after I know we talked about it a little bit on TWIFO last week, I'm surprised that we had a downtick in crude oil on the day. We were down, I believe it's $1.22 on the day is what I was showing a moment ago. And that kind of surprised me a little bit that we actually went down after the weekend, even though we hadn't really per se run up into it, I guess. But anyway, or not too much anyway. But I'm not a crude oil timer. so that's a good thing anyway. The thing that did catch my eye today was Hi-Ho Silver, SLV, crossing the 1650 handle. And I'm excited about that because for those of you that follow the strategy block on a regular basis, one thing that you may have noticed or may have remembered is that a few weeks ago I had rolled down an 18 put down to a 16 half put. So that way, if silver were to come back, we actually have a shot at being profitable around the 17 level instead of the 19 level. And that was something with which I was very excited about. And things might be coming in, which goes to show that sometimes doing stuff is good. Something that we did, and it was stuff that we do. So with that, it's always fun to score one up for the good guys on occasion.
Yeah, Uncle Mike making his TWIFO debut there last week. How did that feel, sir, getting on the big TWIFO show?
Oh, it was a ton of fun. We were talking about silver. We were talking about crude oil. I had a blast. It was enjoyable. I'd highly recommend the show to any listeners on this podcast that do not normally listen to it.
Yeah, believe it or not, we do talk things other than VIX and Apple and Tesla and all that crazy stuff here on the old network, listeners. You just got to find the right show. And in this case, TWIFO, This Week in Futures Options, would be the one every Friday at 1:30 p.m. Central, 2:30 p.m. Eastern, if you are so inclined. You know what is not inclined today for me today is my quotes platform. It does not seem to want to give me the analytics that I desire here. I'm going to keep wrestling with it, though. Hopefully it will get up to snuff just in time for the madness, the craziness that is the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky tune means it's time for the funky part of the show. It's time for the old odd block, the portion of the show where we break down just exactly what was moving, shaking, rocking, and rolling in this relatively quiet day out here in the old marketplace. Let's kick things off. Actually, I was going to try to kick things off for you in the old Teslas. Check your puts, your favorite catastrophe puts, but like I said, my live vol not exactly playing ball with me today, so we'll do it the hard way. We'll do it the old-fashioned way. Let's kick things off instead out here in Expedia as I wrestle with my platform yet again. We saw a lot of action out here in Expedia, ticker symbol EXPE. Closing today, taking it on the chin a bit. Closing today about 142.5 off. $6 and about 75 cents, or about 4.5% out there. So not exactly a rock'em sock'em robot today, at least not to the upside for a good old Expedia. This is the name that does decent paper, at least for an odd block candidate. About 5,700 contracts a day today, doing a good chunk more than that, doing about 24,000 or so out there today. And pretty even paper, too. It was about 1.7 to 1 puts over calls, so not quite 2 to 1 out there in put land. What we saw was a couple of interesting trades. First off, it looks like a bit of a ratio here on the put spread side. In particular, it was out in October, if you want to follow along, listeners. OC 140, 135 put spread going up about 1/2, listeners. Going up paper looks like trading on or near the offer there for the 140 puts, trading those for about $4, and then turning around and selling out 2 of the OC 135 puts, doing those for $2.28 net, just shy of 3,000 by 6,000 total on the day. 29.77 by 59.54. So interesting block sizes. It is worth noting that the OI on both strikes is pretty much shy of, actually no, that's not, I take that back. On the 140 puts, it's about 2,400, so it looks like this could indeed be a bit of a roll down, taking advantage of today's, shall we say, aggressive sell-off here in Expedia, rolling down. Whenever we see these ratios, we typically see sometimes that they're playing with a little bit of house money. That could indeed be the case here with these puts, putting on 2x. I guess if they liked it at 140, they really love it at 135, and they're willing to put 2x times where their money, where their mouth is here for the 140s. Also worth noting, there were some calls active out here today as well. We see the Jan 150 calls trading pretty decent clip, about 5,000 of those bad boys. Paper seemingly coming in to lift some offers on some opening paper. Only about 1,600 contracts open there on that strike. So interesting call paper, not quite related to the puts. They went up a little bit different time, but still worth noting out here. Either way, pretty funky. Mr. Rock Lobster, what are your thoughts here on Expedia as I try to get my live vol to play some ball with me here?
Yeah, are you fighting with your live vol? Are you dueling with it right now?
Don't you hate it when you fight with your analytics platform? No one wins, and whoever wins, you lose.
My analytics platform, which I am looking at, it's looking like the 1x2. They're trying to squeak a little credit out of buying 1x2 in October. Kind of a not much of a. I don't know. It's kind of a myth trade for me on the 40-35 1x2. They're picking up, 58 cent credit or 56 cent credit for that, something like that, 57 cents. That doesn't do much for me. And it does look like somebody is coming in and because didn't the CEO of Expedia, leave for Uber? He is going to try to right that ship at Uber. So I guess he's looking for a big payday if that works out. So, and Expedia sold off on that. So it has all the whiff of a trade that could potentially be something that was connected. Maybe the 1x2 pace for the calls if we cruise down a little bit more, something along those nature. But overall, without seeing any stock against it, it looks a little bullishy flavored to me. I have to say, it has the bullish taste.
Yeah, if they were rolling, short puts, obviously they probably wouldn't be laughing on a day like today, so they probably wouldn't be laughing all the way to the bank and doing 1x2. So it could be initiating an opening, even though the size on that strike is somewhat reminiscent. But more than the OI, so it's about 29.77. Again, once my platform catches up with me, I can see these things. It's always nice to see these things. But still, interesting stuff out here. I may be feeling what you're throwing down there, Mr. Rocklops. It does have a whiff, a taste of some bullishness too. Again, the calls certainly do. So interesting stuff. Maybe people thinking this is a little bit overdone with this departure, this executive departure, and deciding to scoop it. Certainly we're scooping the calls, and perhaps this ratio downside put spread also kind of interesting, trying to grab some credits where credit is due. I won't bother looking at the chart like I normally do in Expedia because I don't want to crash everything. I got it up for our next one, so let's try to go with that. Let's move on. Uncle Mike, this is gonna bring you back into the fold. I know it from your mobile office because you love this name. This is Dollar General. Yes, it's back. Ticker symbol DG. Closing today, $77.37, off about 30 cents or about almost 0.5% on the day. They do have earnings coming up on the 31st, so that's Thursday, before the open there, listeners, so bear that in mind. This is a name that does decent paper, most of it Uncle Mike, about 4,400 contracts a day. Today, doing about 23,000, still pretty even, about 1.2 to 1 calls over puts out here today. So about 12,000 by about 10,000 calls over puts. And what caught our eye out here as, let's see, fingers crossed. I can scroll. Yes, I can. All right, that's nice. Here we go. It was the SEP 67.5, 77.5 risk reversal, or as the Rock Lobster might say in his antiquated lingo, a combo. That's a debate we've had many times. It was the puts trading 67.5 going up 6,500 times. A bit of a ratio risk reversal here. Paper pretty much lifting the offer on those for 30 cents. Then coming on in and crushing them calls on the 77.5 strike, selling those 10,000 times. $2.55 for those bad boys. If you're buying puts and selling calls, listeners, that tends to be usually against a long stock position. So that typically means this could be a collar. Open interest on both strikes exceeds the volume we saw today, but it is pretty close on the put. So it could be a bit of a complete change, of course, hence the name risk reversal. That's why these trades got their name for that back in the day. You're kind of reversing your risk in that sense. But looking here at this name, about 14,000 open on the calls and about 6,600 open on the puts. Look, I'm going to try a chart. Let's try it. Let's see what happens. Oh, success. All right. I can look here now at what Dollar General has been doing for the past year or so. And it has been kind of a bit of a vacillating year. They kind of been trending between about 66 on the low end and about 78, 79 on the high end. And they're right about that range again. They got up to 79 and change on the 24th, actually, and then they kind of gave it up. So they seem to be having some issues pushing through to that 80 level and beyond. If this is the case, then perhaps our friend here, that's why he seems comfortable crushing, overwriting that 77.5 strike. He says, if it gets up there again, I'm willing to give it away, which is pretty close to at the money right now. And he's also willing to hedge some downside around 67.5. So he seems to be clearly looking at this range as well. Before I turn over to the Rock Lobster, Uncle Mike, what are your thoughts here on Dollar General rearing its head again? And just your thoughts. I'm sure this is a huge core holding for you in the strategic night now.
Well, I mean, they know that my kids are going back to school. That's just the word. That everyone knows that I have kids that are in school, and they know it's that time of year to buy them their expensive clothes again. And that's why I think there's just all this activity in it. There's just all this speculation of what'll he get for his kids this year.
There you go, driving all the back to school, all the back to school love there on the show. Speaking of back to school, your kids are always in school, Mr. Rock Lobster, so there's no season for your kids. But that said, what do you think about good old DG and perhaps a nice little risk reversal / collar up here again?
Well, they're saying against stock, maybe. Doesn't this feel like a closer?
Could be.
Dumping. Just bailing. They didn't, it looked like they wanted kind of a leverage trade, and they didn't get the leverage. Now, we have earnings coming out in a couple days, so I'm thinking they got out of the whole banana. I was trying to see if I could find the initial volume. So looking at time and sales, maybe I can get some stock. But I think somebody's getting out of Dodge before the earnings, so they don't have that kind of smack and vol. Let's see here. God, it's hard because I don't see 582,000 shares trade. So it has the hint, the flavor, and the whisper of some sort of delta neutral type. I don't even know if it's delta neutral at this point, but some kind of trade looks like. But it looks like they're selling calls and buying puts back, so that would be some short deltas, which means their stock would have been a long delta. So they would need to be buying stock back. So they kind of had, I think, maybe a long call short stock position on, and normally you want some sort of action out of that. Maybe this was because all the Amazon stuff that's been happening. I guess Amazon feeds off the same people that the Dollar General people do. I'm not sure. But anyway, you didn't. I don't think there was enough action to make the trade happen. So I think somebody just hit the bricks on it. They said, "We're done. We're getting out of here. We're closing. We're saying goodbye, and saying goodbye and good riddance, and not expecting anything. If it's truly closing paper, they're saying we do not want to bet on this move."
I don't want to bet on my platform today as I reboot it for the 17th time. Here we go. Now I can pull up our final. I had some fun with the charts there. Then it all went away in a flash of brilliance. All right, here we go. Final name, but you're right there. It does seem like they're getting the heck out of Dodge. In fact, we noted it when we pulled it up that it looked like it had the whiff of closing about it. And that's usually what you're seeing on these names. Interesting stuff, particularly usually a stock component when you see those types of risk reversals up there. And that looks like what we saw there today. And pulling up the rear, the old caboose here in the odd block today is, let's get into just one of your you like to call them cage matches, Mr. Rockhouse. This is just a put-palooza, we'll call it here. Nickel put-palooza. You guys like cheapy lottery tickets? We got some for you here. These are downside, though, not the call side, but the put side. A put-palooza here. Nickel put-palooza in Pure Storage Inc., ticker symbol PSTG. Closing today, $14.25, down about 70 cents, or right about, off about nearly 5% on the day. It's the name that does pretty odd block level numbers, about 1,700 contracts a day. That's actually pretty rich for some of our names that we profile here today, doing about 21,000. So a little bit more. About 21, almost 22 to 1 puts over calls. Of that 21,000 and change, about almost 20,500 coming on the puts and about 943 on the calls. So let's talk all calls all the time here. No, it was pretty much the lion's share of this volume of this 21,000 and change, 20,000 and change coming in this big just put-palooza, nickel put frenzy cage match, call it what you will here, on the SEP 12 half puts. We saw just blocks of these bad boys just lighting it up. Pretty much all morning long here. Some of the bigger blocks we saw starting off around 4,800 and then kind of drifting lower from there, 2,250, 1,917, then drifting smaller and smaller all the way down to like sub 200 size blocks towards the end there. All for around a nickel. Of course, you're just seeing this paper going up throughout the day. You're seeing that bid offer kind of vary a little bit, but it's still pretty much someone blasting them out, started off hitting bids, and it was blasting out for a nickel. Again, most of these blocks just crushing that bid, and that was pretty much all the paper out here. The rest of it was just some paltry calls here or there. But yeah, someone really aggressively wants to draw a line in the sand here, and doing it for a nickel, which I know Mr. Rock Lobster likes. This is all opening, by the way, because only about 2,698 contracts open on this strike. So someone's saying, I want to draw a nice juicy line in the sand. Maybe not so juicy. Let's just draw a line in the sand here on the 12 half strike. And let's do it 20,000 times for a whopping nickel. Interesting stuff here. Again, this is also probably factored in by the fact this is a cheapy name. So strike selection, not exactly a ton of strikes to choose when you don't have half strikes all the way down and stuff. So you kind of got to live with what you got. In this case, he got the 12 half strike and he decided to crush the heck out of it. His name's kind of, if you've been watching, it's kind of been all over the place. This thing getting as high as about 15 and change a couple of times. It got there back in November of last year, and also very recently after earnings, it flirted with, actually hit 15 exactly, back on the 25th, so just not even a week ago, and it's already kind of coming off the other side of that. Otherwise, it has dipped as low as down to about the 9 handle back in March, so earlier this year. So this thing has kind of an interesting range over the better part of the last year, and someone decided, I don't mind perhaps maybe picking up a good chunk of this to the tune of around the 12 half level, and willing to pick up a nickel otherwise to do it. Mr. Rock Lobster, what say you here? Bring us home, sir, on someone deciding to pick up 20,000 nickels here in PSTG.
Don't you find that a kind of a bold trade?
I can ascribe some boldness to that, perhaps audacity.
Kick 20,000 nickels your way. I've never heard of this company at all. The software defined all flash solutions that are fast and cloud capable for customers, enabling customers to put data to work for their businesses. I guess it is some sort of like Dropbox or something like that. But you see these plays and they dump these puts, and somebody wanted to make a nickel. Maybe, what is it, employee stock ownership program? I don't know. That's trying to buy some cheap stock. But I guess they like their last earnings. It's up a couple bucks on the last earnings. So, but it just looks like it's just that classic cage match where somebody's just loading up on a bunch of puts that could be worth something and worth nothing. And I guess after the last earnings, people are mostly looking like those puts are going to be worth nothing. So we'll see. But you give you gamma for a couple of days before it just peters out.
That has to be some of your deepest insight yet on the show, sir. Someone wanted to make a nickel. Yes, they did. They wanted to do it exactly 20,000 times, picking up that whole nickel. Yeah, it's not bad. It'll buy you almost a Model S, not the newest, latest, best, but a pretty decent version of that. So there you go.
You get 175,000 gamma on 20,000 contracts, by the way.
There you go. I'm sure he factored all of that into his equation when he saw that nice juicy nickel bid and said, I'm going to hit it. It's interesting. I think it's interesting, too, on the execution side. We are seeing more of this happening, where, this one would be hard to kind of facilitate anyway, not make bids for these. But still, we are seeing a lot more of these size trades going up, kind of this piecemeal fashion. Some of this is having to source these nickel bids. You got to find them here. People obviously lined up to get the other side of this. But seeing them going up in little chunks and little chunks and little chunks throughout the day, it's kind of interesting. Are you noticing more of that yourself as well, Mr. Rock Lobster? Just anecdotally, it seems like we're seeing more of these types of executions versus just the mega blocks that we're used to seeing.
Yes, like oddball, try to get it done. And I think a lot of that is just they're posting the volume. And it's kind of like, when you put fish food at the top of a fish bowl and the fish kind of goes up and he plings one, and he plings another one, plings another one. It seems like what this kind of volume is, where they're just, the fish can't go up there all at once and eat it. So they just, grab little bites and snips and until the order's gone. But it's a pretty effective crushing. It right now at the current vol, they're saying that's a 5 delta call for this thing. So that delta, that's what it is, but it seems kind of light for a delta with still, what do we have? Well, we got 2.5 weeks to go, and they're giving that put a 4.9 delta with all the puts you still want at a nickel. So either the stock's taken off or it's just going to kind of sit here. But it looks like a gammalicious trade, let's put it that way, for somebody on the other side.
Gammalicious. I like that. Coming up with all the words there today. But, this is kind of reminiscent of, we used to see these newsletter trades go up like this, but that was a little bit different. That would be one big block where the newsletter guy was kind of front-running his own clients, and then the little clients, the little lemmings would come in buying. So we'd see like a couple thousand go up for the initial initiator of the newsletter, and then 50 here, 25 here, 75, 100 here, 10 here for the newsletter clients as the lemmings kind of followed in and progressively got worse levels throughout the day. This is not quite that. This is still institutional size, but it's just a little bit different way for this paper to go up, and always worthy of note. Speaking of worthy of note, your questions usually are worthy of note, so let's see what you got in store for us. We'll give you a little bit extra time on the old show today because it's Monday. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is, of course, a portion of the show where we dive into all of your various queries. Could be on the live version, could be hitting us up via the old social medias, could be hitting us up via the old-fashioned way, questions at theoptionsinsider.com. You can walk by the studios here in Chicago and knock on the door and say, hey, I got a question for you. However you hit us up, carrier pigeon via our mobile app, all of those ways. We read and listen to them all, and we filter out some of the fun ones to talk about here on the old show. We also occasionally ask you guys a question or two. We got one you guys are really sinking your teeth into this week. We'll get to that in a few seconds. First, let's pay off last week's question. We've taken some fun tips here with our questions. Last week, everyone was obsessed. It was fight week, so we thought we would go catch up with that and give you guys a look at it from an options trader perspective. We said going in, it was a big Mayweather and McGregor fight this weekend. We all know how it went down, but going into it, it was McGregor who was about a 3-1 underdog versus a 4-1 favorite there for Mayweather. So we said, well, looking at option trader, if you would buy a call that's, let's say an out of the money call on McGregor for $1, but it could potentially pay you $3, or would you buy a more, say, in the money call with Mr. Floyd? So about $4 it would cost you, but it only pays you $1. How would you look at it? And I know going into the fight, the whole way through it, it was all Conor. Everyone bought Conor calls. And then a bunch of Johnny-come-latelys came in after the fight. So our savvy listeners, and scammed it all up for Floyd. So because they knew the results. So it ended up being 32% saying they want to buy some Floyd calls. But and then 30% wanted to buy some Conor. So Conor fans were up there. 22% saying whoever wins, we lose. And 16% saying I'd rather sell premium. Mr. Rock Lobster, did you catch the fight?
You mean watch a pay-per-view fight?
Yes.
Like, give them money for that? No. Sorry, I have zero. I guess I'm just not a fight watcher.
I thought Mr. Meatball was going to have a party and invite you over and pay for the fight himself out of the goodness of his heart.
It's possible that could have happened. I think it's not probable, but it's possible.
And fly you in from Maine for his viewing party, all that fun stuff. He was talking a big game on the show last week. I guess he didn't really didn't deliver on that.
He might have, just not with me.
We got a bunch of questions here on this one. First, Alan 8 wants to know if I made any cash on Floyd. Did I cash any calls on Floyd? No, I did not. I'm just not we talk a lot about trading here. I would love someday, maybe we'll see it. We see these the vehicles just still aren't there yet for any sort of event type betting or wagering or trading as I would like it to be. We just don't have, it's not a deep liquid market, certainly not for options, even for the underlying there. You can go to, Vegas Sportsbook, I suppose. Outside of that, you got to use these, online things, or you got to use these offshore sites, or you got to use these kind of quasi surrogates like the DraftKings and things like that, which are kind of float in that gray area in between. None of it really replicates what we do here on the show, which is, of course, I would love to see some sort of deep listed, event type market. And, you could trade these things back and forth. You could trade calls on this guy and puts on that guy. That would be fantastic. I think we're still a bit of a ways from that, but it would be kind of interesting. What do we got here? LAXX. LAXX wants to know, is it me or do the Vegas odds makers do a very similar job to options market makers? Yeah, they do. They set the market. I mean, you come in when they announce a new event, like let's say in this case, they come out and they set their market pretty wide and they see, I think in this case, they started off plus 2,000 for Connor, and I forgot what Floyd was, somewhere in that, he was obviously a favorite, but it was just crazy cakes, and then the fans came in, the Irish came in, everybody else, and just bid it down. It's the same thing you would do with an options market. You set your bid and offer, and then you see one-sided paper flow. In this case, it was hugely one-sided paper flow, and everyone was just buying Connor calls all day, so you got to adjust. You got to take it down, so you take Connor down, you lift Floyd up, make it more attractive, and that's exactly what they did here. It's the same exact principle, a little bit different, a little bit, the mechanisms are different, but the fundamentals are there. This was kind of reminiscent to me of like after you come in after a big earnings event or something like that, and let's say there's a big miss in an earnings name, you're trading options on it, you're a market maker out there, and now all of a sudden, guess what's going to happen that next morning? You think people are going to really want to come in and buy a lot of calls from you? And they buy a lot of calls and this thing? No, they're going to buy puts all day long, and that's all they do. So you as a market maker have to figure out how to deal with this one-sided paper. You're going to be selling puts all day long. And that's kind of what these guys had to do here as well. So analogous. I never thought of it that way, but it's an interesting analogy. Mr. Rock Lobster, any thoughts here? You think it's a similar function they perform out there in Vegas, a little bit different, but still similar.
I think too is because the line is kind of the theoretical value, right? So when you look at all the basketball and football and everything, there's always a line, right? The line is the theoretical value that's kind of fair value, and then everybody sort of bets on either side of the line. So I would say that function is eerily similar to what market makers do, and the line keeps moving as people pile in or bid the vol up or sell it down. So it is eerily similar to what market makers do. It basically just everybody's always running for the hills. You're either running up or you're running down.
And Mr. Uncle Mike, sounds like the mobile office may be moving. Can you hear us, sir? And you have any thoughts here on the market makers in Vegas this time as opposed to on the exchanges?
Oh, crystal clear. I can hear you. My thought on it is that it's a similar situation in that, yes, the odds are set, the line is set and that type of thing. But here's the thing. Vegas always wins. And market makers like it when they always win. And because they really don't always win anymore, they retire and become podcast hosts.
Hey, I don't know what you're implying there, sir. I won so much, I decided I just wanted to do radio with you guys for the rest of my days because it's fun and I enjoy it. So there we go. I can't speak for the Rock Lobster. He fled to Maine. I think he had those O'Hare puts on and it went against him. All right, moving on to this week's question. You guys are all over this one. This is probably the fastest we've seen you guys flock in immediately after we posted one of these. So clearly, you got some lottery ticket love out there. We asked this week and say, hey, let's get cheap. If you had to buy lottery ticket D's calls for a nickel. We thought about doing it for 5 Delta. We thought that might be a little bit too esoteric, so we revamped it to say just for a nickel, make it easy. In one of these names, which would you choose? So a D's quote-unquote lottery ticket call for a nickel in which of these 4 names? That's all you got to do. So Amazon, Apple, Tesla, and ye old volatility index, a.k.a. the Fair Gauge, a.k.a. VIX. People are these votes are flocking in as we speak. You guys like your cheapies. Yeah, let's dive into it. Oh, by the way, who was it here? A lot of people asked this similar question to this guy here, the Quantum Revolution, and a bunch of others asking, hey, which options are trading at a nickel? So, see, we implied that you had to do some homework on this one. You got to do your own homework, but we get it. You're lazy. You don't want to do the homework. So we went out and we did it for you. See how nice we are? We went and dug up the strikes for you. So we got the VIX D70s right about a nickel. And some of these are close, like it might be bid a nickel, but we want to get you the cheapest you can get for a nickel. So let's assume you get a favorable execution on those. You can buy on the bid. Then you can get those bad boys. D70s for a whopping nickel. Apple, you got to go to the D235s to get them for a nickel. Amazon, you can't even almost get there. They don't get as high enough to get down to a nickel. The highest listed call they have is the 1420, and that's pretty close. That's a dime bid. So maybe if you wait a little bit, that'll come in a little bit, and you can maybe get it for a nickel. That's about as close as you can get in D's. You got to go out a little bit farther to get that. Unfortunately, our poll is only through December, so let's just, for our purposes, say that's a nickel. So let's say 1420. And Tesla, you got to go all the way up to the D's 610 calls to get it for a nickel. So there you go. Let's start with you, Uncle Mike. Would you rather have the VIX D70s, the Apple D235s, the Amazon D1420s, or the Tesla D610s? What's your pick, and what do you think all our cheapie lovers out there are picking?
I'm thinking Apple and Apple. If I got to be a cheap option buyer, I want to be a cheap option buyer in something that has at least changed the world at some point. Tesla has not changed the world. Amazon is, I'd say they're getting pretty close to changing the world, but man, that's a really long way. VIX at 70, that is possible. But I think if I had to pick between one of those, I think Apple would be the most logical bet, if you can call buying a nickel call that far out of the money logical. So I'm going to just start with all the money I make from selling my XLE 12 puts. I'm going to start buying some Apple 230 calls, is it? Or 260 calls?
235s.
235s. Yeah, I'm going to buy me a bunch of Apple 235s. Let's get on this.
I had a feeling you might be going with those tasty, delicious fruit calls. Mr. Rocklops, I have a feeling, I think I know which way you're headed, but maybe you'll surprise us. What are you going for, and what do you think our hordes of cheapies out there are going for?
I think the hordes are going to go for the Amazon 1420s. I would go for the D70s in VIX. I think you might have a shot to sell those higher.
Yeah, those probably have one of the better chances, if you call it that, better chances of coming to fruition. Hey, we got a guy out there. You missed vol views lately, Mr. Outlaws. You got a guy out there for some of the big banks, I forgot what it is, calling for VIX at 60 by Halloween. So if he's right, then these calls are a no-brainer.
They're definitely worth more than a dime.
Yeah, that's true.
Depending on how backward we are.
Once we added VIX to that equation, we kind of did it on purpose. We wanted to see what the response would be, and clearly that is the place. Almost 40%, 39% of you saying 39% of you saying VIX is the place. You guys love your VIX calls. You always have. It's blown the doors off all the rest of these ones that you tend to like as well. So blowing the doors off Amazon, which is number 2 at 24%. Pretty good for Amazon. Number 3 is Apple at 19%. Number 4, the lowly Tesla. Can't get any love on the list today. Only 18% in there for Tesla. I don't know, does that surprise you, Uncle Mike, that your lovely Apple and indeed everyone's favorite Tesla there so low on the list?
No, I'm surprised that the fruit company didn't get more love. I would have guessed that would have been the one. And but with Tesla, I mean, good gosh, if you're going to bet on a long shot that's done this before and has gone crazy before. I can understand VIX, but I don't know. I guess maybe I'm just too Apple bias on this. You know what? I just got to start buying a bunch of Apple nickel calls just to get this thing going.
Well, given how fast you guys are flocking to this question, I look forward to seeing it's going to be up for a full week, so I look forward to seeing how your takes will evolve. These strikes won't change too much, I don't think, by the end of the week. You never know. We could have a big move in some of these. But I don't think these strikes will be changing too much, so we put that out there for you Twitter folks as well. If you're not playing along with our questions of the week, first off, what are you doing? You should be following us on Twitter at Options. Pretty easy to find. And then play along with the questions. It's fun, and a lot of you are doing just that. I'd like to see your thoughts. We also had another question here. Randy Wright just chiming in saying he wants Apple, and he just might join us. I don't know us. We didn't say we were buying Apple. We just said we put it in the poll. So you're not joining us. I chose VIX. Maybe you're joining Uncle Mike. There you go. You're joining him. Let's see. All right. Next up, we got NTT. He wants us. Can you clarify the question from last show? Was that SPX put call spread guy asking about selling out of the money calls versus out of the money puts, or same strike? This is from this question we talked about last week on the show from Salman Azhar. He wanted to know are call or put diagonals better for beers out there in the SPX? Quarterlies. He wants to do a quarterly and then selling a weekly against it. Is it better calls or puts? And you're right. At first blush, when I think I looked at it the same way when I first looked at it, I thought he meant kind of the out of the money version diagonals. But second reading, he clearly meant doing it on the same strike. So that's why the math would be the same. But still, yeah, this is a bit of a confusing question. We had fun with it. I'm listening to the show last week, I think, if you want a full discussion. Mr. Rock Lobster, you missed that one, so I won't bother you to weigh in because I know we might have another moment like the SPX expiration one where you just deer in the headlights moment from Mr. Rock. I wouldn't do that to you again, sir. But Uncle Mike, do you have any more thoughts on this? Remember we kind of debated it last week a little bit, the call diagonal versus the put. I think we all came down on the side of the put diagonal because he said he was a bear. This guy said he was a bear. So the put diagonal probably made, and also just who wants to deal with those huge, meaty, in-the-money calls unless you don't really have to. Are you still falling that way, sir, or have you thought differently over the weekend? Have you had time to think about it?
You know what? As much as I think about all these questions constantly, which I actually do spend some time thinking about them, no, I still think that just doing it with the puts would be a lot easier because when you get the really deep in the money calls or puts for that matter, you get bid-ask spreads about 9 miles wide, and that can be kind of cumbersome.
Yeah, there's a reason why the out of the money's trade. A, they're cheaper. B, they're sometimes a little bit tighter, and so in the money's could be pretty wide sometimes if you're not prepared. And plus, it's just a lot of capital to tie up doing these things. Let's see. We got KBX. Let's see how many we can get in on the old mail block today. KBX 232. No, this is the wrong one. This is Dennis Lirensis. Wow, over 15,000 Jan 55 calls bought for American Airlines Group. Thanks for the alert. Yeah, you're right. We do a lot of that. You're welcome. I'm glad you like it. If you're not following us on our hot options alerts, you can get those on Twitter. You can get them on the website. We do those a lot. We talk about a lot of those names on the shows as well. We'll tell you what's trading hot. We do it midday. We do it end of day. So follow us on all the social medias. You get that stuff. We tell you what's hot in the day. And that day it happened to be, I think this was yesterday, the day before, American Airlines. And he was thankful for that. So you're welcome there, Mr. Dennis. Really, Gene, this is an interesting one. We talked about it a little bit on Twifo. You may remember it, Uncle Mike. I thought it might be good to bring it up here in case Mr. Rock Lobster had any weird service in his back pocket. I'm guessing no, because it probably would be a little bit of a maybe shady thing, but we'll see. Really G wants to know, first off, love your podcast. You're welcome, Really G. He goes on to say, question. A market profile displays limit orders. Is there a service that displays stop orders? Just wondering. We kind of debated this a bit on Twifo last week, Mr. Rock Lobster, but I'm curious if you have any thoughts on it. None of us could really think of anything on top of our heads, nor would we really be inclined to want one of those because it's kind of showing the kimono a little bit. But certainly if you're working the orders, you don't want your orders displayed like that. But can you think of anything that would allow you to have that level of dubious insight?
Well, in the old days, you just used to ask your broker where are your stops.
Well, yeah, that's true. You just lean over to Tubby and say, Tubby, what you got?
What stops you have? And nowadays, what do we do? I don't see that in a limit order book, but I could be that's one where I could be totally wrong on that, but I'm not seeing anything like that in the limit order book. So I do not believe they post those as far as I know. So that's one I got to claim ignorance. I do not know the answer for that one.
Yeah, if there was some sort of book that posted that, and then people got wind of that, I think someone would go shut that down because no client would want to be on that because they don't want their dirty baggage displayed to the world. Let's see, I'm trying to find some quick ones. We're running a little bit low on time. I won't do a spread assignment one on you again in the SPX, Mr. Rocklop. So we all know what happened the last time we went down that road. Here's a interesting, we probably can talk about this for 20 minutes, but we'll see what we can do quickly. Uncle Mike, this is right up your alley. I'll let you dive into this one. This is almost a religious divide in the options world. Everyone has their own view on this. But I'm curious, I think I know what your view is, but KBX232, say that 5 times fast, he wants to know, what is the cheapest way to hedge my portfolio with options? A lot of answers to this question. Uncle Mike, what do you have for KBX 232?
That's one I could talk about for probably about several hours. But ultimately, I like using the index to do some hedging, and I'm kind of an index guy along those lines. It depends on what level of hedging you want, whether you should go with a spread of some sort, whether you should go with a straight put option, or whether you should just say, you know what, I'm just too darn scared altogether. I need to go with some type of principal protected annuity. So there's a lot of ways with which to do that. Typically, for my clients, it usually ends up being a mix of a lot of the things with which we just mentioned, or just don't have much of a portfolio. Just buy a couple calls on the side and keep the rest of it in treasuries or something along those lines. But that's one to where, depending on your situation, I'd be more than happy to, not depending on your situation, I'd be happy to help you go what the best route for you. Give me a call, which I will happily give my number at the end of the show to go through what would work best for you.
Uh-oh, you said the dreaded A word on my network, sir. Annuities. You are now banished for at least 30 seconds while I toss to the Rock Lobster. Mr. Rock.
Got it.
Mr. Rock Lobster. This is obviously one we could all probably talk about for many hours. But that said, what's your go-to? If you got to get cheap, you going collars, you going put spreads, ratio, put spreads, diagonal. What are you doing?
Cheapest. Well, I think when the market is going crazy, actually VIX call spreads are the cheapest because of the future backwardation. You can actually get call spreads for relatively cheap prices when VIX already starts to jam. Under normal circumstances, we have all kinds of ways of financing SPY puts or SPX puts, things like that. We do that now somewhat in our classes about just teaching people how to finance put protection. So that I would say would be the easiest. All kinds of other ways would be reducing margin by buying long-term calls. I think Mike already said that is another way, and you could turn that into a strangle, which makes it much cheaper relative and have kind of the similar equity delta that you had before. But you have a strangle, so when the fix goes to 40. Your strangle goes, to the moon. So there are ways to do it. You just have to, you have to understand how the options work. So, and generally, the longer term stuff, especially when VIX is this low, is a much better deal than you would think. So, there you go.
Uncle Mike talking annuities. You're calling VIX a hedge. I don't know what to do. You're both banned for at least another 15 seconds while we head on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, ban lifted. I'm feeling charitable. You're lucky. It's your lucky day here. And looking at these numbers, Amazon slowly climbing a little bit on VIX, up to 24% now, you guys out there, but still VIX in the lead. 38% of you guys loving yourselves some cheapies on VIX. The vote's still piling in. Get in there. You got till the end of the week, but if you want to adjust the numbers now, make your voices heard, get in there at options, and you could do so. Not too much on the earnings radar really for the rest of this week. We got some names still that you guys like to watch, including the old invisible pants friends of Lululemon. Ticker symbol, of course, Lulu. They are on Thursday, and other than that, not really a heck of a lot on the micro radar. That said, now that your ban is lifted, Uncle Mike, and you are suitably shamed, what say you? What are you watching for the rest of the week, sir?
Well, besides my annuity option put-call ratio that I have, because I will say this in full disclosure, I think I'd have to look again, but I'm 99% sure that every one of my annuity clients also has some type of option exposure within their same household. But that's another story. Anyway, things that I'm watching, I think that we're going to have a relatively slow week the rest of this week going into next week. All of Andrew's buddies that are at the Hamptons for the rest of the week are enjoying their last bit of summer, and the real money is going to start coming in next week. I could be wrong, however, but I am positioning along the lines of lower volume, and a lot going to happen next week after the big holiday.
Yeah, you're right. We kind of have been a little bit spoiled. I mean, this is traditionally just a terrible time of year from a volume and markets perspective. There's literally usually nothing going on. Everyone in the big institutional side is off in the south of France. So nothing going on in, the VIX or SPX or out in the Hamptons. So yeah, we've actually kind of been spoiled the last few weeks. Some things have actually been happening in the marketplace. So I think we're all kind of just geared up for this new regime of activity, forgetting that it actually is still the dog days of summer and nothing literally should be happening right now. So I guess we're just catching up on a little bit of nothing here on the old markets. That said, Mr. Rock Lobster, what you got cooking now that your ban is lifted as well, sir?
Well, I feel so much better that my ban is. I still think you can't even toss me one of those, SPX questions again. I'm sitting here begging on Instant Messenger. Send me an SPX question.
Next time, if you're good, I'll give you this one from Nelly 2. You can redeem yourself.
Yeah. It's okay. What are we? You know what? I think the market, like anything, has trends and trendy things driving it. And right now, the trendy thing driving the market is the tweeter-in-chief. Today, you saw some positive comments on tax reform. Market was kind of a little red and sluggy all day. If we get some kind of adult solution to the debt ceiling limit and they stop just doing stupid politicking with us, I think that could be, like some type of normal government activity would be great anytime. And I think that could be a catalyst. Right now, I'm not quite seeing it yet. And so anyway, it's just right now, I think we're out of the earnings cycle. The earnings, for the most part, I think, again, we're pretty good. So in a news vacuum, any news is causing the move. So that's really all I'm watching. Just, okay, what's the latest news and how much will the market move on it? And, and how insulated are we from the tweet factor in the market? So we've had a lot of strong moves in VIX and weak moves in the SPX. Which, happens from time to time. So we'll see if the SPX can actually move on one of these things. So that still has yet to be determined.
All right. That music means we're done. We've come to the end of yet another epic foray through the world of options. We talked some Mac, talked some VIX versus Apple versus Tesla versus Amazon. You guys still weighing in on that bad boy. Talked, how to hedge your portfolio cheaply. Did that in about 5 minutes. That's impressive. A bunch of other fun stuff. Limit orders, how to find them or perhaps not find them. And all the other fun stuff popping off out here. Crazy nickel put-palooza in PSTG. All the good stuff we had for you. Hope you enjoyed it. If you're listening live, we like you guys. If you listen after the fact, we like you guys too. We know the lives is kind of just a bonus. It's for fun. We like to do it out there. But for all you else listening after the fact via the app or via iTunes, wherever you get it, our website, we do love you guys too. Send those questions in. We read them all, even if we can't answer them all on the show. Like Uncle Mike, Rock Lobster, dying to get his hands on a new an index settlement and spread question. So we got one of those for him. Send it in so he can redeem himself. But before we go, once more around the horn, let's start with you, Uncle Mike. He's already mentioned the dreaded A word twice here. Let's see if he can get it thrice and then get permanently banned forever. Uncle Mike, what you got cooking, sir?
If you want a financial advisor who is not afraid of the word row, feel free to give me a call. I'm more than happy to work with anyone in any way, shape, or form and help them to hedge their portfolio or look to get a little bit more aggressive, whatever the case may be, whatever your need is. Feel free to give me a call at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
There you go. Hit the man up. If you too want to learn how to get your puts for cheap, hedge your portfolio for darn near nothing, call Uncle Mike. And he'll also tell you how to do it without ticket charges, which is also nice. And maybe if you're lucky, maybe he'll do it for you. All right, and last but not least, Mr. Rock Lobster. Don't hit him up with any questions about any sort of like spreads in the indexes because that's not his forte. But other things he'll get you on. Mr. Rock Lobster, what you got cooking for us over there in the land of the pit?
Yeah, we have a couple things. September 14th, we are going to have our directional trading class using Vol to help you trade direction. We're going to have a Saturday class on a Thursday evening and see if it's easier for people to attend live. Also, my Easy VIX webinars will be coming out soon, helping people really understand how those things trade and where all that information that the Fear Index gives you, actually probably one of the best products around for delivering market information and sentiment, but actually very little of that is in the cash index itself. It's all in the futures. So anyway, we'll be doing that. You will see that coming out. The first webinar will be a freebie on that one.
There you go. Check them out. So yeah, as we said many times, what do we jokingly say on Vol Views? The answer to all volatility questions lie in the VIX futures term structure. If you're confused by that, if you're intimidated by that, hit up the Rock Lobster, and he too can walk you through it. The first one's free, kids, so check them out over there, optionpit.com, to learn more. And on behalf of the Rock Lobster and Uncle Mike and indeed myself, I want to thank all of you guys out there in the listening audience for downloading, streaming, and subscribing, for all the other fun stuff that you do, including hitting us up with such great questions. Keep them coming, and we'll see you on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.